Hey, what's going on, guys? My name is Richard Moglen and welcome to another stock market watchlist video. What I'm going to be doing today is going through all 14 stocks on my focus list for this upcoming trading week, and I'll be talking about the technical chart patterns in TC2000 as well as the fundamentals through MarketSmith. So for each of these stocks, I'll be going through kind of my methodology, why I picked it to be on my list, as well as give you guys kind of the setup that I'm using, as well as the potential buy points that I'm looking for. So first, we've got ACMR, which I actually already own since the 10th of February. And the reason that I liked it is because it had really digested this big move upwards of over 100% very well. And once again, it's consolidating, tightening up on this right-hand side. And I bought it on the 10th because I saw that it was increasing on big volume buzz. And if you're not familiar with what volume buzz is, it's basically the volume at that time compared to the average volume at that time. And the day that I bought it very early in the day because I saw that the volume buzz was plus 100%, which basically means that twice as many people as usual were acquiring shares. And this is often an indication that institutions are picking up position or a whole bunch of retail investors. And those are the type of situations that I want to be also picking up shares because that dries up the supply and allows the stock to move upwards very quickly. So that is why I bought ACMR on that date. And once again, I'm looking for a breakthrough this upper trend line and I want to see above average volume on that breakout day. So now looking at MarketSmith, we've got the fundamentals for ACMR, and it's exactly what I look for. Plus 130% in earnings, plus 44% in sales, and plus 30.9% in after-tax margins. And the earnings still isn't due for about a month or so, so we've got some time to potentially build up a cushion and maybe hold through earnings at least partially. You can also see that the ratings over here are very good. RS ratings an A+, SMR ratings an A, accumulation distributions an A, and the overall composite rating is a 98. So one thing that I really like about ACMR is this group RS rating, because often the best stocks are in the best groups, and if the overall group is doing well, that supports the stock and allows it to move upward even more. So good fundamentals and technical chart patterns from ACMR, and that is why it is on my watch list for a potential add-on to my position. So next we've got BX, which is in the financial services sector, and you can see that like all the stocks that I like to look at, it's right at all-time highs. And it's been consolidating nicely for the past few weeks, and I'm looking for a breakthrough the 64.97 level on above average volume, or potentially a green dot entry. And if you're not familiar with what a green dot signifies, it is basically a crossover of the fast 10-4 stochastic over the blue 10-4 stochastic, which just kind of signifies a momentum shift upwards. And it's a good way to buy a stock that is actually oversold at the moment. So next, going to MarketSmith, let's take a look at the fundamentals for this stock. And you can see once again, it's got very impressive earnings and sales numbers. Earnings are up 545%, sales up 314%, and the after-tax margins are also up 23.1%. So fantastic numbers there. You've got a good EPS rating, a great RS rating, SMR ratings an A. One thing that does trouble me a little bit is this accumulation distribution rating is a D. Ideally, this would be a B or A. But overall, the composite rating is a 97, and that is the fundamentals for Blackstone. So next up, we've got Coop, which again is consolidating right near all-time highs and has been just doing very well since its IPO in 2016. So once again, it's in an overall uptrend. And what I would like to see for a possible entry is a breakthrough this 174.2 level on above average volume. So let's take a look at the fundamentals for Coop. And yeah, you can see earnings are up 150%, sales are up 51%, and the after-tax margin is up 13.9%. So it's not quite as strong a trend as Blackstone and ACMR, but it's still an overall nice uptrend, and it's in a growth period of the stock. So next up, we've got FTAI, which actually had a green line breakout on this past Friday. And this could mean that it's ready to move up very quickly. And I really am encouraged by all this volume coming in on the breakout days. So a green line breakout is basically a break of a significant line of resistance on above average volume. And for a green line to happen, it has to form an all-time high and then rest for at least 3 months. And you can see that this line was actually set much longer than that, all the way back in 2018. So the fact that FTAI is now breaking through it is significant. And because of this volume, it is likely to continue upwards, at least in the short term. So that is what I like about this setup. And taking a look at the fundamentals, it's also pretty impressive there. So earnings are up 275%, sales are up 60%, and after-tax margins are also up 15.8%. And one thing that's very cool about MarketSmith is they draw in this kind of pivot area and also a suggestion for where your stop loss should be. So right now they've got it coming out of a flat base, which is a stage 1, which is great. You want to be focusing on stocks that are in their early stages of their advances, in stage 1 or stage 2 preferably. So that is FTAI, and now let's move on to IPHI, which is also right near all-time highs and had a potential breakout here, but it fell right back into the base. But it's still consolidating right near all-time highs and really tightening up on this right-hand side. So what I'm looking for here is a breakthrough this long consolidation pattern here on above average volume. And taking a look at the fundamentals, we've got earnings up only 4%, sales up 19%, and after-tax margins up 22.4%. So not the great earnings that we like to see, but still pretty decent. And overall, the EPS rating is a 77. The Group RS rating is an A+, which is great. The SMR rating is a B. And what I really like to see is the accumulation distribution rating is an A-. And finally, the composite rating is a 97. Next up, we've got Paycom, which you can see got knocked down by its earnings report on 2/6. However, I really like how it's recovered nicely and is now back above its 10-day, 30-day, and 50-day moving averages. So after it's found support at the 50-day moving average, it's recovered well and actually had a green dot on this past Thursday. So on Monday, I could actually buy it based on the criteria for my green dot setup, which means that a green dot has to occur within the past 3 days. However, ideally, I'd like to see it really move up sharply and break through into new all-time highs through this 342 level. And going through the fundamentals in MarketSmith, you can see that it's been a very steady company and has produced excellent earnings over and over. You can see that this past quarter, its earnings are up 41%, sales are up 29%, and the after-tax margins are up 26%. And you can see that the EPS rating is as good as you can get at 99. The Group RS rating is an A+, the SMR rating is an A, the accumulation distribution rating is only a C, but its overall composite rating is a 99. So overall, this is a good stock to kind of balance out the more volatile stocks in your portfolio, because you can see that since its inception and its IPO in 2014, it's just been steadily rising. So it's always good to have these type of stocks in your portfolio to kind of balance out the SPCs, the Teslas, the Rokus, those more volatile and fast moving companies. So next up, we've got PCTY, which is also a type of payments company. And you can see on the daily chart that it's also consolidating near all-time highs under this 150.24 level. So the buy point that I'm looking for is a breakthrough of this 150 level on above average volume. Now looking at the fundamentals for PCTY, you can see that its earnings have also been very, very good. This past quarter, they're up 57%. The sales are up 23%, and the after-tax margins are up 15%. And what I like about this stock is its EPS rating is fantastic. Group RS is great. SMR rating is great. Accumulation distribution rating isn't that great at C-, but its overall composite rating is a 99. And going back to TC2000, I just want to say one more thing. I actually did buy this stock on Thursday, 2/13, using the green dot setup. And the reason that I bought it is because it was increasing in the morning on above average volume. So once again, I was looking at this volume buzz indicator, and because it was up 50, 100%, I knew that there was a lot of interest in this stock, and it was likely to continue its upward trend that it's been in for a long time. So next up, we've got one of the recent IPOs, Ping, and you can see that it broke out of its IPO base and has just kind of been drifting higher before meeting resistance at this 28 level. So you had a couple of green dots that didn't really amount to much here. So what I would like to see is a move upwards on more significant volume than this. Here is a sign of accumulation, which is great to see, but I want to see a definitive breakout day, hopefully through this 28 level. So going to MarketSmith, let's take a look at the fundamentals for Ping. And yeah, you can see that for a IPO, these numbers are fantastic. 450% increase in earnings. Sales are up 45%. After-tax margins are up 14.5%. And overall, just a very solid stock. You've got EPS rating of only an 80 because it hasn't really had that positive track record because it's such a new IPO. But overall, the ratings aren't that great. But to me, the chart matters a little bit more than these ratings. Next up, we've got Square, which you can see is a little bit different than my usual setup that I post on this channel. And going to a monthly chart, you can see that it had a big increase in 2016 going into all the way to 2019, and then formed an all-time high, and since then has rested. So it's actually below its green line right now, which means there's a little bit added risk because of all that overhead supply. However, it is in a short-term uptrend right now, and is right at some significant levels of resistance here. And I think that if it breaks through this, it could really recover nicely, and it is within that kind of 25% of its all-time high that is Mark Minervini's requirements. But taking a look at the fundamentals, they are very, very good. It's definitely in the top 30 of my fundamental list, and you can see that the earnings are up 92%, the sales are up 44%, and the after-tax margins are up 9.6%. Its EPS rating is fantastic at 99, and you can see a bunch of A's here from all these RS ratings. And what's especially important is this accumulation distribution rating. So really good ratings from investors.com, and the chart pattern is improving every single week. So next up, we've got STNE or StoneCo, and you can see that's also right brushing up against this green line here, and it got pushed back and is really oversold at the moment. And this past week, it had a bunch of Bollinger Band bounce indicators and also a green dot on Thursday. So this is a very solid company, and once again, it's right at all-time highs. And the entry point that I would use is either a green dot if it's increasing on above average volume on Monday or Tuesday, or a breakthrough of the green line finally. You can see that it tried to brush against this significant level of resistance here, but failed here and here as well. So looking at the fundamentals for STNE in MarketSmith, you can see that the earnings are up 70%, the sales are up 55%, and the after-tax margins are up 30.1%. And you can see for the past few quarters, it's been doing very, very well in terms of fundamentals. You can also see that the ratings are pretty decent. An overall APS rating of 84, Group RS rating A-, SMR rating A. I don't like seeing this accumulation distribution rating of C-, but the overall composite rating is a 96. It's also always important if you've got MarketSmith to focus on this RS line. Ideally, this would be approaching new all-time highs, and hopefully if it really breaks out, this will happen for STNE. So next up, we've got Team, which is also consolidating right near all-time highs, which is what I like to see. And after really getting pushed down in August of 2019, it's recovered all the way and really climbed up this right-hand side. There's also some signs of good accumulation here with a big spike in volume on the earnings day. And overall, it's acting well and consolidating right under this 155 level. So the entry point for me would be any up day next week on above average volume. And I think it could really break out strongly after this short-term consolidation. So looking at the fundamentals for team in MarketSmith, you can see that for the past few quarters, it's had very steady growth in terms of earnings, sales, and also margins. This past quarter, it's up 48% in terms of earnings, sales are up 37%, and after-tax margins are up 23%. Its ratings over here are very good. The EPS rating is as good as it gets, 99. Group RS rating is an A-, SMR rating is an A, accumulation distribution is a B+, and its overall composite rating is a 99. And one thing that is interesting is its RS rating is an 88, which is definitely a knock against team. But since the overall group is doing so well, that won't really stop me from taking up a position if it really breaks out next week. And there's always something to kind of knock against a stock, and there's always a reason to not take up a trade, but you kind of have to make a judgment call. And overall, I think the fundamentals are pretty strong for team, and the chart is also looking very good. Next up, we've got VCTR, which you can see has just been going sideways for the past couple weeks. However, this past Thursday, it did try to break out, but that breakout did fail. And this is the opposite of what you want to see with a gap up like this. You actually want to see it be successful, finish near the high of the day, and have ideally a couple follow-on days. However, it fell right back into the base instead, and this is a sign of weakness. However, its fundamentals are pretty strong, and this will be on my watch list as long as the chart doesn't completely deteriorate. So looking at VCTR in MarketSmith, you can see why I believe the fundamentals are so strong. The past 2 quarters, its EPS has been up 102% and 161%, and its sales has been up 99% and 128%. The ratings over here are about as good as it gets. EPS rating of 99, Group RS rating of an A, SMR rating an A, accumulation distribution B, and an overall composite rating of 99. And one thing I also like to do is go over here and look at the annual estimates and past performance. And you can see that for 2020, it's estimated to have a earnings per share of 410. And this is a significant jump from 2019. And this is what's called a breakout year. And this type of earnings change can lead to a dramatic increase in the share price. And that's really what caught my eye. So next up, we've got XP, which is another recent IPO. You can see it's never really formed a nice IPO base like what Ping did right here. However, it's been moving up gently and now consolidating under this 43.52 level. So for me, what I'm looking for in an entry is a break through this level on above average volume. And for an IPO, it's got very strong fundamentals. And you can see that the earnings growth these past 3 quarters is up 100% each quarter. And the sales is also up 40%, 44%, and 84%. So really good fundamentals. The EPS rating is a 99, Group RS rating is a B+, SMR rating is an A, accumulation distribution rating is a B+, and the overall composite rating is a 99. So finally, we've got ZM, which is Zoom Video Communications. And like SQ, this is a little bit different than my normal setup. However, it's still within this 25% requirement for all-time highs. So hopefully overhead supply isn't holding this back too much. But overall, it's consolidating nicely under this 93.21 level. It's actually looking a lot like CDLX before it broke out 2 weeks ago. So I like the signs of accumulation, these big spikes in volume here as the stock moved upward. And I really like the fundamentals as well. So taking a look at MarketSmith, you can see that the earnings growth has been fantastic. And last quarter, it was up 800%, sales were up 85%, and the after-tax margin is up 15%. The overall EPS rating is an 84, the Group RS ratings great at A+, SMR's B, accumulation distribution ratings an A-, and the overall composite rating is a 97. So a strong fundamental company, and I want to see that reflected in the chart, and hopefully it approaches all-time highs sometime soon. So that is the analysis of all 14 stocks on my radar for this upcoming trading week. And down here are a couple stocks that I'm also watching but have earnings this week. So I hope you guys enjoy this video, and I hope you learned something about my process. Please remember to leave a like down on this video and show me some support. I would greatly appreciate it, and I'll see you guys in future videos.